What's up, guys? This is Shane Schofield from Schofield Trading, here bringing you a market update. Here's a quick disclaimer for you guys to read through. Give it a pause. Always make sure that your risk is limited when you're trading because nothing's guaranteed. About myself, I'm Shane Schofield. I'm the founder of Schofield Trading. I trade US equities. I'm a technical trend trader, and I manage a private fund. I started off spread betting from home and managed to turn a 4-figure account into 6 figures. The ebook's available on our website, which is www.ScofieldTrading.com.
Hey guys, my name is Ty Vinnick. I'm co-founder of the Ace of Swords hedge fund based in California. So on top of managing the fund, I specialize in trading options and futures on different market indices, commodities. I deal a lot with professional type strategies such as option spreads, things of that sort, ETF shorts. I'm a market timer, technical and statistical trader, and I try to pinpoint turning points in the market and extreme zones as well as trading trends.
Okay, first of all, guys, let's have a look at the Dow Jones Industrial Average. This is the daily chart, and as you can see, price has still been trending upwards. There's not really been any downside. Looking at the weekly chart, this trend is still intact. Market gave another hammer bar a few weeks ago, still looking extremely strong, and earnings are coming out for companies, and they're coming out with pretty good earnings. And if we have a look at the sentiment on Wall Street, on IG Index, the client sentiment is currently 91% short. So this gives me the feeling that we could potentially still be going upwards for a while before there could be any sort of reversal.
That's also interesting. They're short Euro USD, and it's been trending up and up and up also. It's kind of almost like they're trying to fade trends consistently, huh?
Yeah, it's mainly for the indices that it works for, not so much with currencies. So
you follow that with that as well?
No, just with the indices I look at. So like even with stocks and stuff, I don't look at the country indicator for that. I only use it for the indices. Okay, looking at the S&P 500, still also looking quite strong. Breakout could be a breakout and retest and keep going into the upside. Nasdaq also had this moment where the buyers had to make a decision, and that dip ended up getting bought again. Went up to make new highs, and
it seems a little wobbly at the moment. It's not as easy to make those gains as it was before.
Yeah, true. It does look that way, but still, I think the new high confirms the uptrend is still potentially intact. So I think we could potentially see maybe a small pullback and then a bounce again.
Can you extract that? Can you extract that trend line to the right?
This one.
Mm-hmm. Interesting, isn't it?
Yeah. So
I think the next week is going to be probably the testing zone for what happens, if it can hold that trend line or come back down and have a failed high.
Yeah, I think it still looks pretty good. Stock terms, looking at AMD, had pretty good earnings, had a good run up above $15, but didn't hold. Looking at the chart, this could potentially be a double top, but AMD needs to come and take a run and jump, and try and get above this 52-week high to confirm the uptrend again. But I still think it's a great company. It had great earnings. Another company that also been looking at is Biosym, which has also still been trending upwards, currently at $33 now. Earnings are coming out this month for August, and yeah, I think this has still got potential upside to keep going, even though it's at $33 now. And
where would you be your exit zone? You made some good money on this.
Yeah, I still wouldn't have an exit zone. I'd still be just trailing my stop loss accordingly. So just trail it, and we can be in this hopefully I'm in this for a very long time, towards $100, $200.
Wow. Okay.
It'll be great, but until I'm in it until the trend reverses, and then I'll be out of it. So yeah. Also, TJX has got earnings this month. It went down to another 52-week low, which is interesting. So I think it still looks weak, especially when the market's making new highs. That's a sign of definite weakness for this stock. Earnings
Sure.
coming out in the next few weeks, so that would be that's going to be very interesting. And yeah, we'll see where we are.
Yeah, that's really interesting. And the markets have been kind of boring, with the extreme level of low volatility that I wanted to talk about. Okay, so looking here at the monthly S&P 500, let's actually go to the weekly. Delete all this stuff. So on the weekly, we had an interesting doji type of candlestick, which just shows indecision between buyers and sellers because it closed exactly where it opened, even though it went higher and lower during the week. Sometimes we get dojis like that at the top, like we did here, we did here, we did here. So I'm following to see whether we get a little bit of downside from here that could confirm some kind of top. Why I think this could be a top, I think we've developed a very long sort of a wedge pattern of literally uninterrupted highs consistently. But look how narrow the recent range has gotten. So I think that this has to break in one way or another. Obviously, because I think that the long-term trend is still so far away to the downside from here. We've never really exceeded this trend line by far. See how interesting that is, Shane? Like how the top of the trend line here meets it here?
Yeah, exactly.
Of this channel line on the weekly?
Yeah.
So I think the confluence here of this wedge pattern and this long-term trend line is really starting to weigh on the market. So as a downside, I would wait for these lows to break. So you're looking at 2,400-ish at the S&P 500, which would confirm a cyclical top here. And yeah, I mean the support level for a pullback like that would probably be something like this, right? So those highs, this low, and this channel low. So the market is usually this symmetrical. So in the next few months, we still could see this move to the downside here. However, and this is this caveat, we could enter a blow-off top scenario where the market just explodes to the upside in an irrational way. That will be confirmed if we go above 2,500. And then we could literally see a crazy move to the upside. I don't think that's going to happen, but it always has to be a possibility. Why I don't really think that's going to happen, the VIX index has made an all-time low this past week and closed higher. You can see the wedge on the S&P is replicating itself in the VIX as well, but in the other direction. So, wedge patterns in the VIX can resolve themselves as this one did, and extremely, explosive patterns. This one didn't really pan out as much, but you still had some kind of upside. And this one had pretty substantial upside as well. So I'm really watching this carefully to see what happens to the VIX in these few weeks. So a lot of people have been making the argument and talking about the VIX staying low for a really long time. And, we've seen funds like XIV and SVXY just defying logic altogether. Here you can see SVXY, which is the same as XIV. I just like it better because it has options. Since February 16, this thing went from $15 to $100 after split, almost $100. And it seems like it just can't go down, which makes sense because the VIX is at 8. So I wanted to talk a little bit about how this fund works, what it does, so people understand the risks that are associated with a fund like this. So a fund like this is short the VIX. And how does it do that? It shorts VIX futures. So I know most people that are actually in this fund, they don't completely understand how it works and why when the VIX is at such low levels, this fund is very risky. And I'm going to show you something kind of simple. Let's Google SVXY holdings. And we can go here to the ProShares website, which operate this ETF, and we can see that SVXY has about $1 billion, 570 in cash, and the rest in these futures. So what they're doing is they're short futures for August and for September. Now, the reason this continuously goes up is because people assume that in the future the VIX will be higher because it's so low today. So the VIX for September is slightly higher than the VIX for August. So they short September VIX and then they buy the August VIX. So that creates a roll because they're always shorting something more expensive and then buying it when it's cheaper. So that decay translates into profits in the SVIXy fund. So what can go wrong with this when the VIX is so low? Let's do a simple exercise here using Excel. So we know the amount of assets and we know the amount of futures short that we actually have. So if we look at it again, we can see that we have approximately, it's actually an exact 19,168 futures for September plus 28,689 futures for August, total of 47,852 futures. Now, what's interesting about this number is that we actually have a 0.05 cent increment in the VIX futures, which means that that's the minimum amount of movement that goes up and down, and each tick size like that is $50. So we take this number and multiply it by $50. So this tells me that for every 5 cent move in the VIX, this fund is going to have a movement of 2,392,600. Makes sense, right?
Yeah.
So far, so good. Now we take this number and we will divide it by, first, the total amount of assets. The total amount of assets here we have 241,932,875 plus 326,337,375. So this is the total amount of assets that they're holding short, right?
Mm-hmm.
So we take this number and divide it by this number. Try, let's do it this way. So this number, and we divide it by 2,392,600. So this amount, the 237, is essentially how many 0.05 VIX movement we need to have in order for this fund to essentially blow up. So if I take this number, 237, multiplied by 0.05, that's 11.85.
Mm-hmm.
Okay, so what all this math means is that currently, if the VIX goes up 11 points, and the VIX is at 9, so it's not too difficult to get from 9 to 20, right?
Yep.
If the VIX gets from 9 to 20, every 5 cent move in the VIX, this fund will lose $2,302,000. But if it only has the number of 500 and some million dollars to lose, that means that an 11-point rise in the VIX will wipe off this ETF completely. So let's assume there was a correction in the market and this blew up in one day. Do you think it's feasible for this to go from 10 to 20 in a single day? Remember, 20 is the long-term average in the VIX.
Mm-hmm.
It's not unfeasible, right?
No, it's happened plenty of times.
That's right. So because the VIX has gone so low for so long, we've gone to such an extreme point that the math of this SVXY will actually make this ETF go to zero in a single day, given a 10-point VIX increase, as you can see by this math.
So you think it could actually go to zero if the VIX goes to $20?
So if the VIX goes to $20 in one day, because the next day it will rebalance itself and will be a little bit different.
Mm-hmm.
But if the VIX goes from where it is today to $20 in one day, people are going to wake up holding this ETF at zero. Yes, correct. You can see why, because if we know how many contracts they hold short, which we do, We know that every 5-cent move in the VIX will lose them $2,392,000. We can take this number and divide it by the amount of assets, and we know what VIX movement is actually needed for this ETF to go to zero, because we know what they're holding.
Yeah.
So given this was almost impossible when the VIX was at 20 or 30, because you needed to move to 60 or 70 to make that happen. But coming off of 10 or 9, it's not too difficult to move up 10 points in the VIX.
Yep.
Which is why holding this ETF at current levels is so dangerous. Here we have an example in 2015 of the VIX going from about 15 to 40. And what was the consequence of that? We had a 60% drop in 3 days. So it can happen.
Mm-hmm.
But we are in a far more extreme place today, where the VIX is at 10 and below for a long period of time, and a similar spike in the VIX from 10 to 20 in a single day can actually take this to zero. So I think that's really interesting to see the level of complacency that has been created from having a low VIX for such a long period of time.
Mm-hmm. So do you think it'd be a good trade to short the SVXY then?
This is a position I'm taking, yes. Because I don't know if it will go to zero per se, because we need this event to take place in a very short period of time. Mm-hmm. But that's usually how markets break down. You know, you wake up one day, there's some random piece of news, but because the conditions are here, you know, this can happen. And it can cause a VIX spike that's much bigger than what we're used to seeing. I actually believe that because XIV and SVXY became such popular instruments, they themselves became a reason for the VIX to stay low for so long. Because before, when we had a spike in the VIX, it wouldn't be so short and die right away. It would actually spike and stay up for a while, like you can see here. Or even here, or here. But SVXY and XIV became such popular instruments that it suppresses volatility itself, because people just keep buying it. So if people buy SVXY, that ETF goes out and shorts the VIX directly, because that's a way to gain short VIX exposure. So if they short the VIX, that keeps the VIX low. You follow the logic? Mm-hmm. So I think a main reason that the VIX is staying low for so long is because of these ETFs, because these ETFs didn't exist a few years back. They're relatively new. So we don't really know what would happen if there was a very large VIX spike. It can actually wipe these off. So in February 2007, as an example, there was a very large VIX spike. Mm-hmm. I don't think this chart goes as back as that. You want to switch to yours? Maybe it goes back. So this is a similar period where the VIX is between 10 and 11 for a long period of time in 2007. And how many months was this? Like 3 to 4 months. Look at this day.
Wow.
So this is how periods of complacency usually end. I've done some backtest on this. And the VIX opened the day at 10.5 or so and got as high as 19.5.
Wow.
Have this happen tomorrow, XIV would go to zero.
Wow.
In a single day.
And that's similar after bouncing from the lows. Yeah.
So keeping it at the lows for such a long period of time creates this contango decay, which makes this go up consistently, 1-2% every day because of that futures rollover we talked about at the beginning. But the longer this lasts, the more vulnerable these funds actually become, because you need less and less of a VIX spike in order to wipe those out because of the math we explained before.
Yeah.
So at some point we will see something like this. And it will cause some short covering in the VIX. Short covering in the VIX will force people that hold SVXY and things like that to sell. So I think it's going to be interesting. I think, if you want to short it, it can't be too much of a position size because, again, as long as the market doesn't go down, then this thing continues to grind up all the time, and it's, pretty upsetting if you short it. Mm-hmm. But this is not the only event in history in which we've gotten a sudden VIX spike like this that wiped it out. Like, you see, this is well ahead of the financial crisis. There was actually no negative news in the market at that time, and it's one of the only times I can find literally the VIX going from 10 or even in the 9s here almost to 20, and that's just in one day. That was really a weekly bar, but can we switch to a daily here? Yeah. So here's that period. Does it look very similar to where we're at right now? Here we're creating that, same kind of wedge. And when that wedge broke out, I think we're making a very similar type of wedge right now. When that wedge broke out, that entire move, it's just, I think this is how this volatility environment is going to end.
Oh, that's very similar. Do you think it could go a lot higher? Because obviously this is 2007. Now we're, 10 years ahead. Do you think there's a lot more volume in the markets? Do you think this could spike a lot higher than it did in 2007?
The reason I think this is going to spike higher is because in 2007 we didn't have XIV and SVXY, and we didn't have billions and billions of dollars of retail VIX shorts. We only had professionals trading VIX. Today we have a lot of retail investors trading VIX by buying XIV or SVXY. They're very popular investments. So most retail investors, they don't understand the math I just told you, and they're going to wake up one day and their account's going to be down 60% after they've made, I don't know, how much has XIV been up this year? 100%?
Yeah.
And they're gonna freak out and sell it right away. So when they sell it, the funds that own it are gonna have to buy those VIX shorts back. So that's gonna create an explosion in the VIX. You know what I mean?
Yeah.
So the longer the low volatility environment lasts, the more complacency it breeds, the more likely this is to happen.
Mm-hmm.
Does that make sense?
Yeah.
So we can go to another time. Can you forward back to 2010? Yeah, that's the crisis. So that's kind of interesting. But here's another example of a low VIX environment coming to an abrupt end. Obviously, the VIX didn't go as low as we did this time, so this is actually less risky than what happened at that time, because we've gone to a VIX of 10 and 9. But as I was saying, the VIX makes these wedges, and when they break, watch out. So how quickly did we go from a VIX of 15 to a VIX of 48?
Wow.
If you're holding XIV, that's not going to be a fun ride.
Yeah.
So, it's interesting. I think we're in a much more extreme place than 2010. So in 2010 and in 2007, these ETFs didn't really exist. So I don't believe they would have survived this move or the move in 2007. They might have gone to zero and shut down.
So what's the best thing to do then? Do you buy VIX or short SVXY?
I think shorting XVXY is a better trade because the timing is less of an issue, because you can't buy the VIX directly. You have to buy calls, and those calls have time decay, they expire and go worthless. With XIV or SVXY, you can potentially just gain very large percentages when the VIX just drops. So you can actually buy puts on SVXY itself, which I think is my favorite trade to do, waiting for this VIX spike. But again, it could be a while until that happens, and while the VIX is just moving sideways on its wedge pattern, nothing is going to happen for now. Let's go back to where we are now. So as you can see, the current wedge that we've been in, let's zoom a little bit outward, is the longest this has ever lasted. This has never lasted this long. So this has been going on for quite some time. And the way in which this ends, I think it's going to be very similar to 2007. We will just continue to grind up, and then one day we're just going to wake up and this will be here. So yeah, that's why I believe the market is in a very risky spot.
Do you think it could take a while before this happens, or?
Yeah, that's the issue. It's already lasted about 2 to 2.5 months longer than any other example in history. We had the most closes below 10 and below 11 in VIX's history as well. And again, I attribute that to the existence of SVXY and XIV themselves, because they attracted so much new money to short VIX that never existed before.
Yeah.
So when it ends is a tough one, but will it end? Yes, definitely, it will end. This is not going to last forever. I do not believe for 1 second that low volatility forever is the new normal. I just don't buy it.
Okay, guys, sign up for our free video content on YouTube. Just subscribe to our videos. Get in touch at contact@ScofieldTrading.com or our website and phone number there. Also, we have our options courses, which is coming very soon, which we're going to teach people how to trade the professional way and the smart way. And we're basically going to teach the basics of options trading and teach you guys with little or no experience how to get into this properly and how to potentially start making money.
Right, so I think it's a really interesting time to get in because we have a lot of these potential opportunities with the VIX being at all-time lows. Strategies are obviously different than what they would be if the VIX was a little bit higher, but this is a really good time to get in and learn about how to do it properly and how to potentially benefit from big declines in the market, rises in the market going sideways. Just learn about the different market conditions that could exist. I think a lot of people that have been trading in the last few years, they don't really understand what corrections look like and how markets can actually fall in value because we've gotten so used to perpetual up moves in the market and every dip being bought. And I think it's a good time to get ready and prepare to a possibility that may not last forever, and learn how to hedge your portfolio correctly and learn how to really make money in both ways, whichever way the market goes.
So we look forward to bringing that to you guys, and it will be out very soon.
All right, thanks.